Okay, in 1969, I got registered as a stockbroker. So I went through the whole system of the markets not getting over 1,000 for about 10 years until Ronald Reagan was elected president. When Ronald Reagan came in, he changed the whole investment view. From 1982 to the year 2000, the markets went up all the way to the dot-com bubble in 2001. Then we had Y2K that got the Fed putting a lot of money into the system because they thought everything would collapse, and that didn't happen. Then we had 2001, 9/11, and again the markets crashed, and the Fed put a lot of money into the markets. They do that by buying treasuries. So the market was flush with a lot of money after 2001, after 9/11. All that money chased into hard assets, which included real estate, creating a real estate bubble that culminated in about 2006-07. Then the market collapsed again. And the markets have been coming up for, today is March 9th. They've been coming up since the bottom of the market in March 9th, 2009. We've just topped out within the last 2 weeks, ending that 11-year bull market. Interest rates have been going down, down, down from 1980 when they were 20% down to today's interest rate is a record low. This morning, the 30-year interest rate went below 1%. Unheard of. So now, where do we go from here? What's the projection? The projection is we will see a repeat of what we saw after the last number of crashes, but for a different reason, probably. Now we're expecting the not so much demand to drive the market back up, but the lack of supply. We're going to be closing down a lot of global markets. A lot of countries are upset with this coronavirus, which is spreading around the world. China is in big trouble. They've been closing down a lot of factories. Donald Trump has been pushing America first, make America great. This has all started before the last 2 weeks. This has been going on now for actually a couple of years. So what will happen is now production will then turn inward to the United States. This will help some countries, help some companies, because we will then produce our own products here in the United States. The global markets are probably done for now. And that means that supplies that were cheap will be gone. We won't buy cheap Chinese products anymore. We will start making them in the United States. We won't buy products from around the world. We'll have them here in the United States. For the first time in a number of years, maybe 30, 40 years, we're energy efficient. We even have our own oil. So everything is going to come from the United States. So it's a matter of trying to get our own supplies. We won't be able to go abroad to get cheap items. We're going to be making them here. So I suspect we're going to see a repeat of what happened in the 70s. I lived through the 70s when we had markets that were in the demand for products was greater than the supply. We had inflation. Inflation was strong in the 70s. And what will happen here, the same thing will happen here when we don't have global markets. We will have inflation. Inflation will help guys like you in the trailer business because if you have the product, you will see prices rising. And they will go up because we will not see cheap China imports. We will not see the global markets influencing us and seeing our production go offshore. It's going to stay here. And when it stays here, our own people make money. When we make money, we spend it locally. And when Rondo makes money, he will buy locally. He will buy Chevys. He will buy Fords. He will buy trailers that are made in the United States. Prices will climb. We will see prices going up. We will see interest rates starting up. Interest rates have been going down for 30 years. Today will mark the bottom of the interest rate market. And interest rates will start going back up. And that's my prediction. The stock market will take a year to recover from this break today, but a year to 18 months we'll see the markets going back up again. My prediction.